Good afternoon, everyone, and welcome to AfCFTA webinar for Ghana. This is the first ever webinar we're going to have in Ghana, and we're going to have subsequent webinars. So welcome. We're really excited to have you on board. This is a webinar, so if you're an attendee and you want to comment, please, you can comment in the chat and also raise your hands if you need us to open your mic for you to say something. But then the program will be for 1 hour, 30 minutes, 1 hour for the panelists to share their ideas on the topics we've raised, and 30 minutes for the Q&A. So please bear with us. We want to stick with the time and not delay too much. So without much ado, my name is Nanaya Owusu-Banahene. I'm going to be your moderator. I'm currently the Senior Sales Manager for AfCFTA Ghana. AfCFTA is a global fintech where we deal in cross-border payments, and I'll talk about AfCFTA more later in the program. But then I want to zoom in straight to introduce our wonderful panelists for today. And these are very great and well-respected people within our society. So I will start with, and right now we say ladies first. So I'll start with Nkechi. Nkechi, how are you doing? Hello, Nkechi?
I'm very well, thank you, Nana.
Great. So we have Nkechi, the surname, I'll pronounce it later. Can you help me? Akunyele, that's nice. Nkechi is the managing partner for AccessView Africa, and AccessView Africa is a business development and advisory firm based in Accra. She's a former regional treasurer for West Africa for United or UBA. And she's a global financial professional with C-suite experience in treasury, business development, and investment advisory. So nice to have you on board, Nkechi.
Thank you very much. Good to be here.
Good to know you. The next person is Mr. Mark Yeboah Champong. Mark is currently the head of commercial and business banking for First National Bank. Mark has over 20 years banking experience. He's worked in Stanbic, Stanchart, and now First National Bank. Mark, great to have you on board. We also have Mr. Louis Yao Afo, who is currently the Group Executive Director for AfCFTA Policy Network. And he is also the CEO for Lobby Enterprise and holds several responsible roles within the SMB field and trade arena. So I want to welcome Mr. Louis Yao Afo also. Next person is, you're welcome. The next person is Ashwin. Ashwin, can you help me with your surname? I don't want to come into this thing today. So Ashwin is somebody who's been helping to drive what we call entrepreneurship, technology entrepreneurship across Africa. He's currently the managing director of MEST, which is Meltwater. And he's currently working with about 60 plus African fintech companies, or African technology companies, not fintech, technology companies, which went through the MEST incubator based in Accra, Lagos, Nairobi, and Cape Town, and has 60 entrepreneurs in training to support them in launching their own startups. So Ashwin, great to have you on board.
Thank you.
Our final panelist, who is an economist and has 10 years experience in economic research, governance, and public policy, financial inclusion, international development, and project manager. He used to work in the Ministry of Finance, currently a management consultant for ACE Consult and Management Services, with operations in Ghana and the Caribbean, where they focus on fintech and financial inclusion advisory services, public financial management, and project management, including business development. So nice to have you on board, Martin.
Thank you. Thank you for having me.
Great. So as I said, we're going to be discussing the economic outlook for Ghana, and looking at AfCFTA, looking at in terms of recovery, looking at AfCFTA, looking at the Cedi. And these are unique panelists that we've brought on board to help us look at this question. So I'm going to throw the questions to the panelists, and they are going to thoroughly interrogate and discuss it. And then after the 1 hour, we'll all come in with our Q&A. And then where we didn't understand better, we can ask questions, or where we want to add some to the comments they made, we can do that. So I'll just zoom in straight and say, Welcome on board, and it's going to be an exciting session. So my first question, and I'm going to throw it to the economics because it has to do with economy, and in case you can come in when Martin is done. So what I want to know is, Martin, what do you think is the current state of Ghana's economy in terms of what are the challenges of the recovery from the COVID-19? What are the biggest economic strengths and weaknesses that we have now? Can you help us? Do you think there's any strength at all?
Thank you, Nanaya.
Thank you.
And it's great privilege to be given this platform with my colleague panelists to discuss the way forward for Ghana post the COVID-19 pandemic. Now, taking a cue from the president's recent State of the Nation address, he alluded to the fact that the COVID-19 pandemic has impacted tremendously on economic activities in the country, not just in Ghana, but globally. Now, looking at the 2020 economic performance, which has created dire uncertainties and weakened growth conditions, among others, global economic growth rates were revived into the negative region. And even at that, Ghana's economy still saw some marginal positive growth rate at 0.9%. Now, the shock of the pandemic to already weak fundamentals led to some output losses, increasing the rate of unemployment and some revenue shortfalls. This led to fiscal holes, which can only be financed through borrowing. Now, so that means we have our GDP ratio increasing that made our GDP ratio to increase to 75%. Now, this is the stark reality facing us. And as a country, going forward, even as we are beginning to roll out the COVID-19 vaccines in earnest, with the aim of getting our lives back to normal and making better our socioeconomic lives as a people. Now, prior to the pandemic, now let me just give some statistics to some of the reasons why I think we still have some, prospects in our economy. Statistics from the World Bank in 2019 revealed that Ghana's real GDP growth rate was hovering around 6.5% in 2019, and that was up from 6.3% in 2018. This is actually better than that of our counterparts in sub-Saharan Africa, looking at Nigeria and Kenya, which grew at 2.2% and 5.8% in the same year. Now, as has presently been the case in Ghana, the services sector contributed mostly to economic growth in 2019. And, the services sector, the industry, followed by industry, and then the agri sector. However, the country has some leverage, and which can be derived from the performance of the economy from 2019. And as I anticipate a quick recovery from the pandemic, the president announced an ambitious growth rate of 5%, slightly higher than that of the IMF of 4.2%. And I strongly believe, as optimistic as I am, looking at some of the benefits we have derived from government's flagship programs like the 1D1F, planting for food and jobs, the digitization agenda of the economy, I think we can achieve some positive outlook for 2021. Thank you.
Thank you. One more question before we go to Nkechi to ask something. You mentioned in terms of the GDP growth that the government has ambitiously stated. Yeah. Do you think they are looking more, relying more on the oil sector to contribute to that growth, or they are looking to expand in terms of revenue collection options to boost some level of growth within the economy?
Well, when you talk about revenue, currently we already know that we have some revenue shortfalls looking at the lockdown that took effect from last year. And in as much as that is the case, the discussion has always been around making certain that we expand the tax range that we currently have in our country, because the structure of our economy is solely dependent on the taxes we get. And so, I mean, that's one of the things to look at going forward. And I think for the oil sector, I think it has, it looks positive, and these are some of the things we can enhance going forward to, achieve, some growth positive outlook post COVID-19.
Okay, thank you.
Yeah.
Okay, Chidi, you want to add something to it? Sorry, you're muted.
Okay, thank you very much for having me here. I'm really, really honored. And to be honest, when we talk about the Ghana economy, we can't talk about recovery without looking at what are the strengths that we've been able to actually ride on all this while, because we are talking about being one of the, prior to the pandemic, one of the fastest growing economies. And that was actually as a result of a confidence that the market had in Ghana. So if we do bonds and the markets, we have huge investor patronage to it, whatever the political stability, just the security. These are things that we have actually been able to ride on. On the back of that, we've been able to do. And what this has done for us is that our debt ratio has really ballooned. And that was the burden we had into the COVID pandemic. And over the period, we have also seen ourselves gone into a lot of incentives and some stimulus packages that also has actually increased that burden level. And I asked myself, to be honest, debt is not a problem. You know, anybody that says that is a matter of what you do with the debt. Today, what we're financing with our debt is a lot of recurrent expenditure and, of course, refinancing cost and interest payments. So that's where the problem is. So a lot of this, and we'll actually pat ourselves on the back on 1D, one factory, and go on and on about it. But we need to ask ourselves, how much of this borrowing has gone into that sector? And we're talking about an economy that has been saddled with, okay, we're more import dependent than anything, you know, and what we are actually exporting is just our primary raw materials, just like we have in most African countries. It's not really peculiar to Ghana. So if we look, we're talking about recovery, we need to rewrite this. That's the point. So wherever we see ourselves, you know, the weaknesses that we're seeing is our debt burden, and we need to flip that to a situation where we start financing real growth. And that is what we haven't done across the African continent, and particularly in Ghana. So we're looking at to our primary products. So it's not just exporting crude, and we talk about having crude oil as our main this. So whenever there's oil increase in prices, we're smiling. And at the end of the day, we talk about what is not going right when it goes down. So we need to really flip that narrative and start talking about value addition, which is really why by the time we start talking about AfCFTA, we will see also how good that will be. So looking at our productive sectors, what are we talking about? Across that value chain of agriculture is not just doing and exporting raw materials, is actually adding value to it and creating industries from there for us to be able to reduce our imports. Import substitution is very, very key here. So by the time we start flipping that narrative, you will see that we are really going to get it right as we go into recovery. The COVID has also shown us areas where we're not doing right. You know, health sector, tech has really come up in the front burner as very, very important. The fintechs are there. I don't want to talk about banking. We'll get to that place because it's another story. So, but the issue is that there are sectors that will really drive this economy as you talk about recovery, and we need real investments into them. Thank you very much.
Great. So I like the way you ended in terms of the sectors that will drive the economy. How there have been certain recovery programs that have been driven by the government, and which sectors, you mentioned some of them. How should the government tackle those sectors in terms of recovery? What should they do for them in natural? What opportunities should they create for them?
Okay, we've seen, for instance, look at what happened in the healthcare sector, where most of the pharmaceuticals actually switched immediately to things that will aid the pandemic. Fine. And that actually has boosted, seen a bit of boost. And that's a good one. We need to actually look at agriculture. We've ignored it for so long because of the inherent risk. And it's so sad. It's something that we need to bring back to the table. Industrial, adding value addition, which will actually create increase our ability to have industries and actually create employment. That's very, very key. So there are so many, and the issue is that during this pandemic, we've seen all of those things come to light. Tech is something that we need to do. Our private sector, of course, is missing in all of this, and that's another issue. So we're always crying for government to come and help. But apart from putting those structures in place, enabling the infrastructure, putting the infrastructures in place, there's really nothing the government can do beyond that, which is really lacking anyway. It's not like they've provided it. So that's another thing. But the private sector has a key role to play here in looking at this, the gaps that we have and making sure that we're actually covering it. And of course, the whole idea here is for them to make money and line their pockets. They're going to do it, but it's just to see opportunities that are here and we take it accordingly.
Great. So I like how you bring the private sector, and great to have Louis on board who's helping to drive the AfCFTA. And Louis, should we say AfCFTA is the angelic African policy to help private organizations contribute to the growth of the economy?
Yes, I mean,
how
basically,
how realizable is that?
Yes, thank you, and good afternoon to your listeners and my colleague panelists. Basically, I had the overview that Martin gave. One thing we should not forget is that no country was prepared for this shock. And again, because of that, I remember that Ghana had the Obatampa package of almost close to about 100 billion to support companies or private sector initiatives that were hit by this pandemic. And so most governments had to do a kind of realignment, counter shock. AfCFTA was envisaging phase 3, which has to do with what we call the digital trade or e-commerce. Phase 1 is trading goods, trading services, and then free movement of people. So we're anticipating that phase 3, which is e-commerce, would have been the third phase, but because of COVID, that had to be quickly, it's being mashed up quickly to be negotiated because now the world is in the virtual world, e-commerce, digital trade. And if that corridor was really open, it would have been very easy for a lot of the supply chain to really be effective within the time of the early days of the pandemic. The Continental Free Trade Agreement is not only about trading goods, but one key area that is the trade in services. And most economies have really not tapped that part that contributes a lot to GDP. And the African Continental Free Trade Agreement, the trade in services has to do with also, trade in services also have to do with education, it has to do with professional services, it has to do with tourism, it has to do with hospitality, it has to do with ICT. And these are some of the areas that have been. So you realize that a lot of companies have been brought under the big umbrella under AfCFTA, trading goods, trading services. And then you look at protocol on, what do you call it, the health side, because health also comes under sanitary, phytosanitary. And therefore, health is one of the areas that under services have been really greatly developed. We realize that the pandemic really exposed our weak infrastructure when it comes to health. And that is one of the areas that a lot of private sector are taking that up seriously. If you take Ghana, for example, the garment industry became very expanded when the pandemic hit, whereby a lot of SMEs quickly sprang up and received support because they had to produce masks and then also sanitizers and whatever. So the Continental Free Trade Agreement actually has really come to really integrate cross-border trade, integrate by boosting intra-African trade as well. And so I think that it is a game changer, but it is steadily.
Okay, so I like you said steadily. Then in terms of what time frame are we looking at? That I think there have been some level of sensitization programs going on after. When are we looking at actualization of some things where people can actually start doing the trade and we're feeling the impact to the economy?
The Continental Free Trade has already started trading. In fact, the agreement says that Article 6, the 22nd country to deposit its ratification, that is when the agreement was in force. So as of 2020 July, it was in force, and trading was to start in July, but because of the COVID. So as of January 1st, trading started, and it is going to benefit countries that have finished the stage 3 of their ratification. That is, after ratification, you submit your letters of ratification and become a full member, and that is what most countries. We have about 36 who are full member states. 36 who are full member states. In other words, they are going to benefit from the tariff liberalization. Those who have signed but have not yet become full members cannot enjoy the trading. And so, if I say steady, what I mean is that yes, we've had countries that have signed, have ratified, and have become members, but there are about 36. And these countries, Ghana is one of them. If you realize, in Ghana here, Casapreco and Gandor, yes, shipped goods. And what it means is that at this point, if tariff offers falls within the range of the region you are taking to or the country you are taking to, you're good to go at 90% of your tariff liberalized and 10% reserve. The 10% people look at it as if it's more like a protectionist way to support growing industry. Yes, so it means that as I'm speaking, one other thing that is working is a Pan-African payment system. It was difficult for cross-border trade in terms of payment systems where we have to always look for transfer, but with after the Pan-African payment system has become one of those payment systems where you can transfer within your any currency within your domicile country, and that is a very great boost into integrating our trade. And so yes, if I say steadily, the only thing that is left is that phase 2, which has to do with intellectual property rights, competition policy, and then investment. These have not been negotiated fully. It is still on course, and I'm sure that by the end of the year, the Secretariat would have put a lot of stamp up.
Great, I like it. I'll come back to the cross-border payments policy or platform you mentioned, but then I want to throw a question to both you and Ashwin. So in terms of, you mentioned digital trade, e-commerce, and how environmental friendly is it for people to easily, let's say, young people who have the capacity to quickly set up e-business or e-commerce? How is the environment friendly for them to easily set up? So Ashwin deals with young people like that, but I want you to start first and then Ashwin can conclude on that.
Well, if you talk about the e-commerce, I mean, basically, there have been a lot of startups. Way, from where I sit and from the interactions I've had, there have been a lot of startups in that e-commerce. However, I think that the Secretariat and the African Union also, together with their partners, came out with this Pan-African payment system. There were other platforms for, information repository. And so one important thing is that individual startups can look at the terrain of their economies and come out with various, platforms, digital platforms, apps that could facilitate trade. Because at the end of the day, like I said earlier, trading services look at the ICT, looks at that region. And so you don't necessarily have to go physically to a member country to trade. And if you realize the services industry, capital is immobile. You can be at one country and sell out your product, like banking services. You might not necessarily have to have a branch in maybe, let's say, Bank A in both countries, in member state before you could transfer. You could be in one and then through a kind of digital platform, do transactions. And so all these are building. The statistics cannot be given, but they are just building around. You could hear so many of them are building. I know one particular trade platform where it's doing so well, that was launched in Ghana, I think last year. they are doing so well. Yeah, there were other ones existing before, the rise of Jumia and what have you. And so I think that basically it is a good start.
Okay. Ashwin?
Yeah, thank you for that. And I think really nice to be on this panel with the respective panelists. And I think while while I'm particularly encouraged with what Lewis's opinion is, I think I also probably want to spark a little bit on this panel, saying that it's not as easy as they make it sound. It's super hard. Like it's so difficult. Trade is not just a single piece of activity. Well, first thing. Second thing, you need to worry about procurement, supply chain, logistics. Like you're talking about at least 8 to 10 different industries, if not verticals, actually coming together to create this beautiful thing called trade. So while there's a rise of e-commerce, while there's a rise of, I think like internally, if not too small businesses, the scale of which where countries are actually starting to trade through each other, through entrepreneurs, especially young and rising SMEs, is still very small. I think the SMEs, if not at least for like investors like us and growth hackers like us, they will probably, they probably don't understand the trade agreement. That's number one. The second one is also the fact that setting up companies in Ghana, if you're a foreigner, is super expensive. It's similarly the same across multiple African countries. Payments is still a big issue. So entrepreneurs still are not, at least youth entrepreneurs and young emerging entrepreneurs from the pyramid, are still not looking at the trade agreement in a way where they think it's going to benefit them. I think the bigger companies and the bigger conglomerates are actually super happy. Like I'm pretty sure the Togo border, once the free trade started, has probably been plying. But I particularly feel the entrepreneurs are yet to still feel the effect. And it's not as easy as it sounds. It's super complex, and it's still getting through all of these is still a nightmare of regulations and systems to still manage.
Great. So I know, Luis, I'll let you come in later, but then how do we solve what you've just mentioned, the challenges that are there? How do we become like the hub of tech and fintech of Africa? How do we create that level of friendly environment to become the hub? Ashwin?
Yeah, and I think we already are. Like I think I think what Lewis mentioned. I think the fintech office in the Ministry of Finance, the Bank of Ghana, I think they're doing incredible work. Like what Kwame has probably done with the fintech office in the last 2 years is commendable work. And I think what people are starting to do from a government standpoint of view, even though the government has gotten to the game late, the delta in time difference is incredible. I think the government has definitely played a very, very large part. I think a lot of it relies still with Ghana as a market. And I think transitioning Ghana as a traditional market to more of the new age, new market. I think Ghana, as we all know, relies still on, I think, 3 or 4 of the major natural resource sectors when it comes to gold, oil, bauxite, manganese, cocoa, etc. And I think it needs to start translating towards more transactions, at least in the urban, when it comes to actually like those sectors scaling as well. So I think when it comes to becoming a business hub, I think Ghana is already on its way. I don't think we need to do it. Would I ask for a little bit more acceleration so that investors don't run away, especially from, I think, regulations from the GIBC as well as I think the Registrar General? Yes. But I think in due time, Ghana will definitely get there. And I think it's already well positioned to actually get to become the business hub of West Africa.
Great. So I think we've looked at regulation, we've looked at letting people know about the opportunity there exists. But then one of the challenges we know in Africa is the exchange rate in terms of the currency. So Nkechi, I want to know in terms of what do you think is the current outlook for the city in the short to medium term? And maybe Martin and then Luis, you can say something after Nkechi is done.
Okay. Do you want me to tell you what analysts say, or do you want me to tell you that? That's the point.
I want the truth.
Okay. So the issue is that from everything that we hear, it's positive outlook for stability and all of that. And this is riding on the back of 3 things, basically. 1, government is going to issue bond. And you know, when we sing that, I was in the sector for 25 years. So when I'm presenting, these are the things that we sing also. So you talk about government being able to, that raising bond, there's a bond issue coming up and Q1, and the effects from that will actually impact on the city. And the next thing is, of course, which is really what I would love to hear. There's a better outlook on the crude exports, and then of course that the various commodities, especially gold, that we are going to see better positive inflows from that. Then the next thing is, of course, foreign investors coming in and actually investing based on the interest rates being attractive and all of that. How can, at the end of the day, what you will ask yourself is, why will we allude city stability to borrowing? That is the one that drives me nuts. So if you actually borrow and convert, are you not going to pay back what you borrowed at the end of the day? In fact, you're actually borrowing to refinance whatever is maturing most of the time anyway. Or is it, if it's fresh, you're going to borrow at some point. So the Cedi has been at, has seen a bit of stability. We're looking at it just taking a bit of, worst case, around 3.9% depreciation, which is very good, looking at where we are coming from. But the point is that we can do better than that. Why do I say so? Because Ghana, from what Ashrin said, we've been positioning ourselves, but the
Hello, Nkechi.
actually, hello?
I think we lost you for some few seconds, like 3-4 seconds.
Oh, sorry. Okay. So when you look at what Ashwin said, as in Ghana being ready, it is for us to convert that to exports. For me, a country's currency is as good as its economy. So when you look at Ghana economy today, what you will ask yourself is how the same thing I spoke about, our imports being basically higher than what we export. And how do we move it towards that that level that we will have to be? We can crash this thing to 1 if we get it right. That's the point. So all that we are talking about is the things that are more borrowing, which is not sustainable. BOG has been sustaining USD, and that's another thing that has been alluded. They've committed to do 200 million to support Ghana cities. Where is that 200 million coming from? From funds that we borrowed, cocoa proceeds that will come in, and we see seasonal spikes. We already know it by September, it will go down, it will go up in December and the first quarter of Q1 of next year. That is the transition that we always see. We see that revolving around. So why won't we say this has to change? And why? How can it change? Today, and when Louis talks about how good AfCFTA is, what we're doing in AfCFTA is supposed to change this narrative, trust me, because what is happening is that we are finally looking at the productive sectors, the places where actually that will actually have this import substitution to actually impact on us. We've been demanding dollar endlessly to be able to finance our imports. Flip it the other way around, and you will see our city strengthen. But what we are seeing today, and that's what I've not heard in most of the discussions, and that's really one thing that I don't know we are going to cover, but trust me, the currency that we are settling after is really an issue. If today that we are funding, we are financing, today we are doing imports, what we want to see is what will rectify our city to actually get to where it should be is for us to actually do more exports than imports. You now say that you're doing, so you flip that narrative and your demand, because whatever it is that dollar is doing, that whatever demand, and so whatever currency you're demanding is actually what is stronger. So you flip that down to the local countries. So you've moved away from dollar because you're no more exporting. You're actually talking about African countries. So between Ghana and Nigeria, you're supposed to be doing, is a controversial thing I'm throwing in here. So you can actually agree with me. So Ghana and Nigeria is trading today, and you actually are looking at two countries that have potential of trading with each other. So there's crude coming from Nigeria or vice versa, and you actually want to actually pay someone in Nigeria. So what happens here is that I'm going to actually put pressure on Ghana's resources to use dollar again to pay Nigeria.
Yeah.
Meanwhile, we're talking Nigeria, Ghana. So what is that third currency doing on top of it?
Yeah.
These are things that I've not seen discussed as we discuss all of this.
Okay.
So we can talk about Casapreco being in this mix. They've been in business. I was their treasury manager at some point when I was in the banking industry. And I know what offered with Casapreco. And that's where I give BOG kudos to, because I took a product to BOG, and they were the central bank that actually approved for local currency settlements, because at that point, Casapreco had serious issues getting their payments from Nigeria. They had serious issue because what they were doing was that Nigeria had issues getting them to pay them. And I was able to actually get the central bank to approve that. And it took a lot of this thing, a lot of presentations and all of that, but they finally did that. So I agree with Ashwin that their response to some of these things is quite good. But the point is that for this to work, every other central bank must be on board, because we need to solve this problem. There's no way. So what will happen, and I will take you through this, what will now happen is that as you now demand for dollar to be able to settle Nigeria, the pressure that you see in this continent is still on dollar, because that is what you're doing. But let it be the only the currency that we can use to derive the value, no problem. But settlement should actually be our local currencies. It is complex, and that's why nobody is talking about it. But I guess if banks are shying away from it, the likes of Aza will actually step in as usual, because that is what has happened in this space. So talk about where our currencies should be. If we keep doing that, you will see that by the time you now want to repair, there are so many things that are underlying. People will tell me the dollars has been borrowed to do business. Trust me, by the time you're paying it back, because you're not demanding dollar, the value of your local currency would have improved such that you will be in the money buying the dollar to repay your finances. It is the demand and supply law that will play in here. Thank you very much.
Thank you very much, Nkechi. It's like you've marketed Aza for me on this webinar. So what the problem you just illustrated, that's what Aza actually has solved in terms of local settlement. And I think after maybe the discussions, I'll talk more about it. But then thank you very much. I think it's very, very unique where you came from. And Luis, I thought you had something to say.
One important thing that we have to know is that all currency situations in, let me use West Africa, will not change much, even after, if we do not change our productive narratives. For as long as we're going to be importing and not exporting, we're going to have problems with a currency, because even the ECO, the problem is that you have most of them have not been able to meet their criteria, their criteria, convergence criteria. Again, if you look at the ECO, the two major anchor countries are Nigeria and Ghana. I'm asking you, during COVID, what did they go through? And so you realize that what would they need to cushion the other countries? They need to produce. And so currency situations will not be much changing unless we change our productive stages, unless we produce value additions, unless we look at our value additions, unless we have tech-based production in terms of the currency issues. Again, one of the areas most of our central banks are failing most most African economies is that we said, oh, cryptocurrencies and Bitcoins and all those are not important. Today, we sat down for most of the Asian economies. This is what this is what is creating wealth for them now. Now I hear some West African central banks coming to okay cryptocurrency. Why have we waited all these years? When people were interested, we say, oh no, we don't, it's not good, it's not safe. So we need to always look at alternatives ahead of time. And so for me, it is not today, not tomorrow. What AfCFTA is coming to do is to enable us to boost intra-African trade by looking at the value chains, and then having value additions to improve upon our manufacturing sectors. Because with AfCFTA, you're going to have input-based imports. And it is important because the raw materials are here. Again, AfCFTA is driving us into what is going to happen called the barter trade system. And those can also help cushion our currency. What is the barter trade system that AfCFTA could create? For example, if you look at the import substitution that Nkechi said, you realize that, look, Ghana imports probably wheat, many millions of tons from Iran, where Nigeria can supply Ghana with that wheat. So in terms of AfCFTA driving us to barter trade, Ghana and Nigeria can come together and say, look, I'm going to give you these tons of wheat. You are giving me in exchange for salt. You don't need to go and import salt from Brazil or from anywhere. A time is coming, we have to look at those situations that will strengthen our currency base, trying to adopt a multifaceted approach going forward.
Great. I think what I'm getting from you two is the productive. In case you want to say something now.
I thank God he came in with all the things that I had a foundation before talking about currencies, because I agree with him totally. For most of these things, we do a lot of talk in Africa. The production that we're talking about, I ask myself, what are we waiting for? Because these things are things that once of course, you can't do currency, talk about the currency, but the issue is that in trying to put things in place for Africa, you actually have to think of how do you settle when these people, that's all I'm saying. Because we know that input production, we need to increase our exports. But guess what, Lewis? We are increasing our exports in Africa. That's all I'm saying, within Africa. And we're still talking, even when we get to that, as we increase production and everything of these value chains that we're talking of, value addition, as we do that, we are doing it within Africa, but we're still talking about settling in dollars. So I agree with you, and I hear you on this thing. Cryptocurrencies is another discussion that we'll get into, because that's another thing that we always look for quick solutions, but you need to look at the environment where you're talking about. So the point is that there are people that understand currency settlements in Africa. So we need to actually say to ourselves, how do we achieve that without putting pressure on our various economies? As even we've gone to the point of exporting some products, having import substitutions, but it's now to settle, someone is looking for another currency to be able to settle it.
Perfect. I think you've rightly couched it, and I think the basic form is that we should look at the productive areas. But I think you are saying that increasing export alone within Africa doesn't solve the currency in terms of if settlements are still being done in the other jurisdiction in USD. We still come to the same challenge. So I'm excited about this conversation. My question is, how can the commercial banks, what's their role in all this? How can they help in this? How inclusive is the commercial banks in Ghana? How efficient are they relative to maybe some peers in the African continent? Are they more inclusive, efficient, or is there something they need to do to change? So I'll come back to Nkechi, and maybe Martin, you may want to add something to it too.
Martin, will you take a go? Or okay, let me just say this. Not that I retired, because I still work in that space, the banking industry. So I I'm passionate about getting it right in that space. And when you talk about what we have done, you look at the stimulus that the government actually has given in the to the finance to the sector. They've actually cut down reserve requirements. So like what they've done is, so that I don't really use terms that will confuse people. They've actually put stimulus to actually do some expansionary monetary policies that will inject funds into the market. So all the sterilized funds are being released. They've dropped some ratios. And this is all about trying to get banks to be able to actually access credits more or less by the SMEs, the product sector. What has happened? At the end of 2020, we have just seen banks' assets increase. What is the basis for the increase? Investment in T-bills and bonds. That's the point. So you ask yourself, what are we doing? Because there are places, today we are talking after, is actually the banks, the investment banks that should actually put products in place to be able to take that space where, because the problem we are talking now, if I move on, Louis will tell me the borrowings that are, and I've heard that for the past couple of days, where people are saying that because we are not our SMEs and a lot of projects are not accessing funds. What is now happening is that they're relying on offshore funds to be able to actually do some of these projects that we have. So if banks are not supporting, if there is no after fund or whatever that we call it, because we need to get to that point where we harness local investments, whether the banks like it or not, for us to be able to support some of these things. We cannot keep depending on external funding for these things. That is where our problem.
Okay.
In this.
Okay, you're breaking up a little bit.
Hello?
Yeah, you were breaking up like for 3 seconds.
Okay, sorry. So can you hear me? Sorry.
Yeah, I can hear.
Okay. So you see the problem that we're having, lack of access to finance, which I don't blame them. Of course, we talk about the high rate of default and all of that. But the point is understanding these businesses and reinforcing them. That's the key thing. And we have to get to that and be part of it from day one. So if we keep looking for external funding, that's when the discussions of currencies, which I still have a solution to, will actually be an issue, but it's really not an issue. But the point is that our banks should step up, and be able to finance most of these things so that we'll actually have local participation in these projects and investments that we're doing.
Great. I think you've responded very wonderfully. We just have some few minutes to bring the panel discussion to an end. I just want to quickly run through the poll and get attendees to just rate for me. So sorry, after the poll, we'll just go into the Q&A with attendees. I think we already have some nice questions designed for the panelists, so I'll be coming to you guys back again. So let me just go through. So attendees, please, I'm just going to read a poll in terms of what is the biggest impediment to Ghana fulfilling its potential as an economic gateway to Africa? So I'm going to give options. I just will want to know through the chats what you think is the biggest impediment, and then it's just a poll, so we are not going to discuss it. So the first one is high cost of company registration. Second one is corruption and red tape. Third one is lack of infrastructure. Fourth is risks from economic instability. Fifth is finding employee with the right skill sets. And then sixth is another reason. So I just run through again. So we are asking, what is the biggest impediment to Ghana fulfilling its potential as an economic gateway to West Africa? What's our impediment? Is it high cost of company registration as the first point? Is it corruption and red tape? Is it lack of infrastructure? Is it a risk of economic instability like inflation, high inflation, taxes or deficit? Or finding the right employee with the right skills. And another, the sixth one is if there's any other reason that is causing this, just let us know. You can put it in the chat. So I'll just give like a minute or two for people to do that. I'm just going through the questions so that I can post it. I think the panelists can see it, but then I'll be picking up the ones. Some of them may be addressed, might have been addressed during the discussion. So I may skip it a little bit and go to the ones I think will need to be discussed. So please keep bringing it. What do you think is the most impediments for us? Okay. Okay, so I think I have, I agree that fintech is a key part. Okay, so Rajesh has a comment in the manage your time by question. So Moses agrees with Ashwin that it's not easy and simple as it's being said. Okay, so I have a question with Ashwin. Some have said AfCFTA will benefit smaller companies, if not directly, at least from their interactions with mega corporations. What's your take on this? I think you addressed it in your discussion, but maybe you can throw more light on it again.
Yeah, no,
Do you
I'd also
benefit
like
small
to put it in the
companies?
chat as
Yeah.
well. Yeah, well, I think you're absolutely right, and I think AfCFTA is supposed to actually force that and actually get, I think I think some big grain businesses. So I can give you a few examples. So companies such as Olam and Ecom, who are trading houses, have now started working a lot more with startups because it's easier, to be honest. If they can outsource their supply fulfillment, if they can outsource a lot of the logistics, why not? Right, so big industries, you can see they're already doing it. But the big problem with working with mega corporations is that a lot of them don't have innovation in their DNA, and it's no fault of theirs. It comes through large years of bureaucracy, large years of compliance. So often for like Nestle or L'Oreal to start working with entrepreneurs, you have to go through a lot of hoops. And we're realizing that those hoops are becoming, like I said, they're becoming bigger and bigger and easier to jump through, but it is still actually coming it's still coming slowly, but I think it'll get there.
Okay, great. I hope Ebenezer answers your question for you. So someone that was thanking Luis for responding to his question. Okay, and then. Okay, I think so. Ashwin, you responded to Ebenezer's one.
Yeah, I can go again if you guys want me to. So what are some of the instruments put in place to promote agricultural startup in Ghana to move from production to transformation? I think it's a fantastic question. As one of the earliest propagators and supporters for agri-tech in Ghana, and especially in the continent, what we've really realized is that working with traditional entities is often easier to actually do that. So we work often with ABSA as a bank, we work with Opportunity International. We're also starting to work with some government-based agencies as well to actually promote startup and promote, I think, the whole move. And again, I don't think you can ever move away from production, considering that a majority of our GDP still depends on production and actually the trade through production. But I think what startups can definitely do is provide for aggregation and transformation, aggregation comes between production and transformation. So in that case, I think a few of the instruments would be I think you can definitely, AfCFTA is definitely one of them. If you look at the new agricultural policy also, which the government is releasing, which also has a lot of those things, looking at banks such as Opportunity International and ABSA, super focused on agriculture as well. So I think those are like the existing instruments.
I can actually add something to that. I think when we look at the most important thing in, because when you still go to APSA, they will actually have their criteria and all of that. But most importantly, I think what we try to do in Access View is to work with farmers and actually in trying to get them ready to show them to investors. We're looking at the entire value chain. So you're looking at partnerships. You're looking at partnerships that will actually bring in input supply, partnerships that will take care of logistics, partnerships that, so that you have all of that sorted. And of course, so when someone is, and of course, most importantly, off-taker, because you have to have off-take agreements to ensure repayment and all of that. So when you have all of that in place, they, for instance, we work with an agri insurance body that actually does that. So on the back of all of that, an investor can actually come in. And that's the kind of thing we're trying to do for agri, so that we're not just throwing it out there and saying, oh, go and access funding. But this package has to be in place, because it's the value chain that anybody, once they look at it, they actually see that you're ready. And there's the possibility of failing is actually very low.
Great, great. I think there's a question that I don't know if Louis, somebody's asking that the tourism industry was hardly hit also. So what are some of the things they should look at to try and recover from that sector?
Yeah, can you repeat the question?
The question is that the tourism industry was hardly was hit by the COVID. How can they recover within that sector? Maybe other opportunities within AfCFTA too?
Yes, I think that it's one of the sectors that really was hit, because you have to move depending on the content of the tourism. But we have, as a network, we are partnering institutions to rewrite the narratives about tourism, not only in terms of destination travels, but you are looking at having a long developmental projects or programs. For example, we have to also develop our creative art industry, which also falls under if you look at intellectual property rights issues, under trade-in services. Under trade-in services, as I mentioned, tourism is key. Now, one of the things that in terms, as I say, it depends on the content of the tourism industry you find yourself. But if it has to be traveling destination, we have to wait a bit. But there are so many other forms of tourism that is really stemming up. And for example, look, I was surprised that even in Accra, we have this planetary centers where you could go view the cosmos or cosmic planets, and it can be charged. So we have to identify new ways of our tourism services apart from just the traveling. For example, it could be virtual. These days we are moving into a virtual. How can you really diversify intangible tourism? This is one of the areas we have to look at. Look, people have so many ways of posting or things on social media, but some have forgotten that it's another way of tourism. For instance, look, I know somebody who just walked all the way during Independence Day of Ghana to go and take some video shots of herself alone, and it just hits the market. Have we thought of that creative entity of tourism? Not just only in terms of the physical, looking at also in terms of hospitality. Yes, they have also been hit. I believe that by the time we are October, a lot of vaccinations have been done much across the globe. And I think that most airlines are opening up. If you take Singapore, I think Hong Kong or Singapore, they are opening up their airlines. Other countries are flowing. So in terms of the practical answers to the tourism industry, it will take some time for the traveler side, but we can improve upon virtual tourism. We can improve on tech-based tourism. We can come out of ways of developing that side. There was something I wanted to add, that in terms of the question that has to do with agri, the African Development Banks have projected about the year 2020 that we're going to have about $3 trillion from agri businesses. One of the things that we have to know is that somebody asked about what instruments are put in place. Under AfCFTA, it is important that countries really expand their economic zones. Economic zones are very, very important. And I'm happy that the Ghana Export Development, GEPA, has developed its development agenda and has now expanded its, what do you call it? I should say the wealth crops that are going to bring wealth. They have expanded it to support. And again, one other area is that the commodity exchange. The commodity exchange is one of the most important institutions that people must really follow, or they must come to do a lot of sensitization, because now you're going to have a brokering system between the farmers and the commodity exchange, helping farmers who might need market immediately for their produce, and also in terms of getting them good prices. I just veered off to agriculture, but in terms of the tourism, the traveling, we have to take our time, but we can really diversify just mere traveling to rebranding our contents.
So can you take this question also? Somebody wants to know the outlook of the Ghana plastic industries. What's their outlook? Industry. Yeah.
In fact, there is no industry that will not do well if a lot of funding goes into research, a lot of groups, partnership goes in. These days, it's better to partner so that you can complete each other's joint projects. Let me put them under recycling. There are a lot of investment that is going to happen and after. That's what I said. If you look at phase 2, you're going to look at investments coming in. They are now negotiating on the kind of codes, the Pan-African code of, let me say, the governance and the investment. And so you have, as I even sit here, there were a lot of investors who were trying to organize an investment program for all the 54 countries, and who were showing interest from other countries, Africans who own companies into recycling, plastic industries, whatever, to come up with some kind of technology-based product and ideas. And so all these things are in the pipeline. I think with time, such individuals or companies who want to go into such sectors will get the information. Yes.
Okay, great. Nkechi, somebody's asking, how have banks prepared themselves to finance about 1.3 billion, I think, USD market opportunity created by AfCFTA? Do you think they prepare themselves enough from your research and experience?
I clearly have no clue, and that definitely not ready for this, from what I see. Of course, because, and that's why I'm saying, I'm not even saying they should do it on their balance sheet. There are ways to do this, because it is really not something that they will just take depositors' funds, because they need to have a vehicle where they will actually put out there and people will know what they're investing in. It might not be just one bank, it's a pool of banks. And there are so many things that we can do from an investment banking perspective. And it's being talked about anyway. But I don't know if banks are looking at that. That's the point. But there are ways to do this. So not even to do, because of course we have to attract foreign investors. There's a plus in and actually harness to do this. So it's possible, definitely, because we've tried to check the pulse of the continent and how excited we are about AfCFTA. And I think this is something that can be done, really.
Okay, great. I think I'll take the last 3 questions, and then I think we can bring the session to a close. Somebody's asking, how can we reduce the cost of paying suppliers in terms of the charges in other jurisdictions in Africa? I'll want to respond to that, but I'll give it to the panelists. So that's what AZA actually has done in terms of our cross-border payments. So what we've done is that we've created matching liquidities available in the African jurisdictions. And if you want to pay somebody in Nigeria, you pay in your local currency in a settled account here, and then we settle them in the Naira. So there's no kind of a middle USD. So I think that's one of the ways that AZA is trying to solve that problem. So if you take the rate itself out, in terms of charges, we don't do charges. In terms of other costs, we've taken all those things out. And I think if you want to know more about it, you can visit the www.azafinance.com. My team will share the link on the chat, so you can visit there. Another question, is food industry has also been hit. So how can they recover? Also, what are the processes? I don't know who want to take it also. How can the food industry people recover?
Yeah, I think that basically all industries that are suffering are looking for the recovery outlooks. The food also hit though, but it depends on what type. Because if you're looking at walk in to eat restaurants, yes, because it depends on the policies of the country where there's lockdowns or curfews or restrictions. And I'm sure those ones also bounce back. But people are also coming out with a lot of deliveries in terms of cooking at home kind of system that is happening. And people do orders, and then the, kind of distribution is also going on where you order, and that was also, I don't know the type that the person finds himself. But if it's raw materials, of course, then you know that basically that one is a process, depending upon the type of cross or farming activities that you are going. But if it has to do with fast foods or say walk in to sit and eat, I think that depends upon the jurisdiction you find yourself. Sometimes there's a lot of restrictions because of the pandemic, and some are doing what do you call it, walk through or drive through. Some are doing order for delivery. So you have to really adjust and strategize if you are in that industry that has been hit. Thank you.
Great. So I think I want to wrap up and just get some brief final comments from panelists, and then we can bring the session to an end. So I'll start with Ashwin.
Yeah, I think it's been very interesting today, and I think I'm very interested to see how how all the pieces are coming together, and I really enjoyed, I think, Lewis and Nkechi's perspectives as well. Thank you so much.
Thank you. Nkechi?
Okay, thank you so much. It's really been an interesting conversation. And like Louis said, nobody saw 2020 coming. It took all of us by surprise. But the point is, we have to now learn that we just have to be ready for the inevitable.
Okay, thank you. Louis?
Yes, I want to thank and congratulate the organizers and colleague panelists. We might not have given you all the 100% answers, but I think that let us keep our hopes. With time, I think that before the close of the year, things will start revamping. Thank you very much.
Thank you to Martin.
Yeah, thank you. Sorry, I had to attend to a few stuff, but it's been quite enlightening hearing Nkechi and then Louis hold the fort. And one thing is certain, I think to be able to achieve the milestones we need, we have to leverage a lot on fintechs to ensure financial inclusion. And I think that's what ASA is basically trying to do. And the whole fintech ecosystem is still trying to build up. And there are a lot of opportunities for a population of over 30 million people. And so there's more to be done. And I can only be optimistic. In as much as this coronavirus pandemic lingers on, we try and ascertain and find the best ways we can to achieve the growth we all desire, but primarily leveraging on the period we have been ushered into, which is the digital age. Thank you.
Thank you very much. We are very grateful for the awesome information you guys have shared to us. So thank you, the panelists. Thank you for attending also. It's been wonderful. We're having such of these sessions, and then we'll be connecting with you more. Have a great day and a great weekend. Please visit www.azafinance.com to know more about AZA. We are there to solve most of your cross-border trade finance challenges that you always have. And search for us on LinkedIn also. Thank you very much and have a great day and a weekend. Bye.
Thank you.
Thank you.